Hello there.
How important is the CEO to a company? Especially if that company is something like McDonald's. That's massive, it's been around for ages, and at the end of the day, it's still just going to be selling you burgers, right? Well, the market certainly seems to care a great deal. For example, when Brian Niccol joined Starbucks as CEO, coming from Chipotle, where he had done such a good job, the share price went up 20%. And when Elliot Hill joined Nike, and he was a veteran of the company, the market really liked him, the share price for Nike went up 8%. So if you care about your money as an investor, even if you didn't care about the company, you should also care a great deal who is in charge at the top. And that got me to thinking, which are the best female CEOs? And which companies do they run? Which are the best investment options and opportunities in that little theme for the week? So let's take a look, let's find out, and let's invest in the best one. This week, we're going to reveal who won last week's battle. We're going to have a portfolio update, and we're going to battle two more stocks against each other. Without further delay, let's get underway. And now on to last week's winner. I'm really excited about this one, although I probably shouldn't be. It was the first week where I've been outvoted. The community told me that I was doing something stupid and have told me the correct one to go for. And so if you watched last week's episode, you might see where this is going. This week's winner, or last week's winner, was Dick's Sporting Goods. I've looked back at the both companies. I think that's the right choice all in all. So I'm really excited to see how that one does. And I'll have a little comparison to compare it if we'd gone the other way and see if the community's helped me out in this front. I'm sure you have. Thank you so much for voting. Okay, let's take a look at how all our portfolios looked over the last week. By way of reminder, it's £25 into each of our three portfolios. The Battle Royale, where you tell me which stock to invest in. The Benchmark, where we compare the Battle Royale against the FTSE All World Index. And the Income Generator, where we try and earn some dividends to pay out a prize money every 6 months. Let's check them out. So last week wasn't too bad, especially after the bloodbath the week before. This week, however, the UK market down again, and accordingly, our portfolio is not looking too great. The Benchmark scraping 0.1% up, but look at the Battle Royale. Ouch, 2.7% down. I'll show you why that's the case in a minute. You don't even have to wait a minute. In fact, I'll tell you right now, looking at the biggest movers in our portfolio slide, look at the bottom there, B&M down 12.2% on the week. That hurts. They declared their earnings this week along with all the other retail outlets in the UK. And although the earnings weren't that bad, the general state of the UK and the investing prognosis for the future doesn't look so great, as I'm sure you'll be hearing about in the news, and retail were punished, especially B&M. Tesco, not too bad, which is another one we hold. However, Adidas, up 4.4%, so that's quite nice, and a little bit of red, little bit of green. Taking a super quick look at the whole portfolio holistically, organised by the total value. Right at the top, Tesla 81.7%. However, considering that was over 100 at one point, that's dropped by a fair amount. You'll be aware of the others on the beach. Nichol's, Adidas now jumping up into 4th place, and Microsoft holding the fort in the middle, looking towards the bottom. There was Tesco. That didn't do fall quite as much as B&M, although still 3.4%, and we're down 2% on Tesco at the moment. A little bit surprised by that, but what can you do? At the bottom, B&M now down 22.9%. That's our worst investment so far. Tate & Lyle, that was doing okay at one point, down 17%. I'm a bit surprised that that's a big loser. Otherwise, Money Supermarkets, no surprise. A REIT is down. That's probably down due to the general economy. Reddit, we've owned it, I think, a week, and we've lost almost 10% on that, but that's a long-term hold, so hopefully its fortunes and our fortunes will change. And the Income Generator is now paying us £13.53. That's up from £12.78 last week. The next payment is £2.41, which added to the £2.43 we already have in cash. That means our 6 monthly payout is £6.84.
Well, we've now added £450 to each of our 3 portfolios, and last week our overall totals were looking pretty healthy. Almost 12% up for the Battle Royale, smashing the benchmark at 3.5, and the income generator pretty flat. And this week that has dropped significantly following our poor performance. Battle Royale from 12 down to 8.65, and the benchmark pretty similar. However, the income generator's a little bit up. So mixed fortunes. Let's see if the Battle Royale can keep ahead of the benchmark over the coming weeks.
3, 2, 1, fight.
Okay, time to take a look at our female CEOs and which companies they represent. Spoiler alert, there are some very good companies out there and obviously some very good female leadership, so it's going to be tough to choose this week.
Here they are, and to sound like a broken record, it was so difficult to choose. There are some fantastic companies out there. In the UK, Admiral Group, which just at a highlight level, trading at 52% below Simply Wall Street's estimate of fair value, so that's already massive. Diageo, some may or may not agree because it's not had a good year. In fact, Simply Wall Street still thinks it's overvalued. If I just quickly show you that, look at that, that's a lot of red, and 22.2% overvalued. And in addition to all of that, looking at its graph over the last year, it's just slowly and steadily declined. However, I think it's a great little entry point, and I don't see why it can't turn its fortunes around. So I'm not writing that one off. In the US, we've got Citigroup, which is also, I always say, not to be an all and end all this valuation, but 40% below, and we know Citigroup's a massive company and they are doing fantastically. Look how positive the future is for it. Occidental in the oil and gas industry, which I'm sure a lot of you know about, also terrific, good value, but again, just a fantastic company. Best Buy, a whopping 64.6% undervalued apparently, but again, just an institutional company out there in the US, and just an amazing company. Ross Stores I didn't know about. I don't know if anyone else has heard of them, but they operate an off-price retail, apparel and home fashion stores. They're at almost 40% below fair value. Less of a good future to speak of, but a healthy company with a good history, so they're very tempting as well. And then I'm sure everybody knows AMD, which I was very surprised to see was 57% undervalued, but look at that future, and it's also got a very healthy cash flow and everything else. So which of the two, or how do we narrow it down to two? And I have elected to go between Best Buy and AMD. AMD, I didn't want to go for them because they're a little bit cliche, but it was just too difficult. It's a great company in an exciting industry, and their earnings grew 800% last year, and apparently the value is still okay. So yes, why not? And on the other hand, Best Buy, you go back to your Warren Buffett and Charlie Munger valuations of things like Costco, and it's romantic in a different way to go for it. A lovely little green snowflake, and it's also a lovely dividend pair, so that's tempting to go into Best Buy rather than AMD. So it's going to be another tough one this week.
Time to take a look at and compare their high-level metrics.
The CEO of Best Buy is Corey Barry, and she's been with the company for a long time, over 20 years, I believe. She served previously as a Best Buy executive and served as the company's chief financial and strategic transformation officer. On the other hand, on AMD, it's run by Lisa Su, who is she's now a billionaire business executive. She's also a computer scientist, an electrical engineer, and apparently she also serves as president of the company. So both very impressive women with long-standing histories with their company, and obviously impressive knowledge to run them. Looking at the major metrics for each of the companies, both massive companies. AMD even bigger than Best Buy at 188 billion to 17. Nothing to sniff at. AMD, of course, with that massive PE ratio of 102 compared to Best Buy's 14. I think it's going to be a difficult decision this week for different reasons. They're two very, very different companies. AMD, on the other hand, has no dividend, whereas Best Buy pays a very, very healthy 4.52%, but that is also well covered by revenue and earnings. Best Buy currently has higher revenue than AMD and a higher EPS. So very, very difficult to choose between the two.
So there you have it. Which one should we invest in? I'd love to hear your thoughts in the comments, please. But my suggestion for this week is... Thank you so much for watching, everyone. I hope you haven't frozen to death in this little cold snap that we've had in the UK. If you're from elsewhere, hopefully you're enjoying better weather than we're having over here. It's been great to be with you this week, and we'll see you next week.
Goodbye.